Good morning. It's Harvey Jackson. I'm going to go through some of the numbers over the long weekend here. Commitment traders on the corn has actually gone long, as you can see here, above zero on the managed money side. And on the soybeans, it had increased beginning of October, and now it's actually fallen off a little bit here. Now 60,000 contracts short. Wheat, so this is Chicago wheat, and it's done nothing for the last couple of months. And you'd probably see that on the chart itself as well. Um, so soybean oil and canola are the two that I'm going to maybe just point out at. I don't have a graphic for it, but went long on soybeans, and I think that's following some of the Malaysian palm oil situation. And ironically, I'm going to say canola actually went short, but you got to remember this timeline is the previous Tuesday to Tuesday as well. So when we look at the COPA numbers, or the Canadian Oil Producers Association numbers, you've got a 3 million crush, and, and of course beating last year's number. So you crushed a pretty good number on the canola, and starting to catch up to some of the normalized crush capacity at this time of year. So you're running over 91%. And what I want to maybe point out here is just where this line is starting off. If it stays above this line, who knows where it's going to go, but there's going to be some rationing of demand that's going to have to happen just because the S&D is so tight. What I did here is just take a snippet from Kyle's trading report, and export data shows that there's 2.11 million metric tons moved to China so far. So if we just do the math of the total export, that's 78% of the canola has kind of went into the Chinese export market of what we sold so far. And if we start putting these numbers together, you look at the total disappearance is almost 6 million metric tons. And again, as stated the previous slide, we're going to have to do something to ration demand. I'm still interested in looking at this position here. If things continue, put in a long position with a stop loss below the market, and exit, at the just below the 700 if we can get there. Palm oil falls, weighted by rival veg oils. That's basically stating a lot of the same as what we've seen. We'll see that in the chart there later as well. Mitch Miller writes for DTN, and he's, ironically, when you look at this chart to the left here, you've got the 60 to 86 kind of the blue line, and then the orange line is tracking the CPI readings so far from 2008 till now. And the worry is that we're going to go back into that kind of a range, or higher range than we were. And that's why this is actually happening here. The 10-year U.S. note has actually went up in interest rates to try to basically predicting that this could be something that's going to happen. And this is usually an inflationary move. So what we want to see is this kind of get dragged and go sideways here, rather than try to follow the similar kind of curve there. Canola is down 10, rapeseed is down 5, soybean oil is down 1.4, and palm oil is down 170 ringgit. What's different about this is you see the Chinese rapeseed oil is actually up. Crude oil is slightly up, and the Canadian dollar is down some more. So here you can see the canola is actually following this fairly strong trend line, and you can see where these other areas would be to probably put some additional sales targets for more grain as well, as we are starting to run into some of this other resistance. What this blue line here is actually a long-term trend line, and now we're trading above it, so that's very supportive as well. Last week we had hit some of my area that I was liking to get that first 10% sold, and we're still trading right in that range as well. So if you're going to consider a sale for next year, still looking at it. European rapeseed down today, but still looks like it's got a pretty strong trend here. 136 is the European rapeseed price in Canadian dollars over the Canadian rapeseed, which is pretty strong. Here's your soybean oil, basically running in this channel, hit the top end of this channel, which is a pretty important area, because if we beat both of there, we're probably looking into higher values for sure. Your palm oil, as I said, we've got a pretty long candle going down, but well supported around that, over that 5,000 ringgit. Here's your Chinese oil. It's actually traded above this sideways channel, so that's a good sign to see as well. Your crude oil, pretty long legs down. I don't think that conflict's over in the Middle East, so Israel is probably still going to have to defend itself for sure. Canadian dollar, long, long candles, and it looks like we're breaking lower yet here. Wheat, the sideways channel going down, lots of red on the screen here. Still, support is way down in here, but make those sales if we're going to get some good bids out there. Your Chicago wheat, and like I said earlier, with the commitment of traders basically going sideways, you can see how long that's been going sideways. It's been a long time. Your Kansas wheat basically going down in this channel. Milling wheat, downward channel as well. Looking for some support. Your corn actually looks, it broke out of this wedge, and now it's looking to get ahead of that high that was made back in October. Next real report to consider is just this one here, our StatsCan report that's going to come out on December 5th. And that's all I have for you today.